Take a look at this shirt. 10 seconds from walking to the car with my pizza into the house, and it is totally soaked. So that's why we are not in a button up in today's video, guys. But I want to give you guys the brief rundown of what I expect for CCIV as far as a short squeeze is concerned and a potential gamma squeeze going into next week. We're going to discuss everything you guys need to know, especially address this whole dilution scare. People are so worried because there's the availability to issue 15 billion additional shares, but this is not going to be the case. There's a very simple explanation, and we're going to get into it and much more in this video, guys. So make sure you stick through the whole thing. Give me your comments down below in the comment section what you think about this theory, and keep in mind, I'm not a financial advisor, I'm not a financial planner or your dad, so never make trades based off of my trades or my theories. But I will also be showing you guys my trades because I put my money where my mouth is, as well as make sure to hit that like button and subscribe to the channel for more videos like this. So let's get straight into it. Let's acknowledge the bullish setup that we are looking for going into next week. Obviously, pretty much all last week we were just gapping down every single day. You guys see these big red candlesticks just gapping down, very bearish downtrend. Now it looks like we have since reversed to a bullish uptrend. We will not get clarity or a clear signal of this until we do break out past $25, but we did hit this low at $20.90 during a bit of a flash crash. That was July 19th. Ever since then, we have been going up a little bit more every single day. Now we are at our first resistance level at almost $25, where we did start to really gap down last time during this bearish downtrend. So I think if we can get a good day going into Monday and then throughout the rest of the week, that'll be very good. But even on top of that, we have the huge potential for a short squeeze and a gamma squeeze, and that is what is very important to go over in this video. Now, for a brief rundown, we're going to take a look at the Ortex data. Keep in mind, take this information with a grain of salt. Some people say it's accurate, some people say it's don't, and the cat's joining me. I'm not going to in this video, but the short interest change of 1.23%, return shares of 1.02 million, borrowed shares 1.73 million. So that is a borrowed change of 712.21 thousand shares. Current short interest percentage of free float at 18.12%. That is extremely high. That is categorized as extremely high. And then the current shares are sold short of 37.51 million. Relative to the volume that we're seeing on any given day, really in between about under 10 million to a high of about 20 million. So relative to the volume we are seeing, it would take about 4.63 days to cover this whole short position. So if we do get that short squeeze, it'll be very hard for shorts to actually get their hands on shares to cover with, and we could see the price go insane if we get outside volume coming into the stock, because for the past 4 or 5 months now, we've had really low volume besides one day, April 26th, when we did see a massive gap up. That was the Apple and Lucid rumors. We've seen 55.5 million for volume. Other than that, we have been on a low of about 6 million, 5 million in volume. So it has been very, very low activity with the stock. But now that we have approved the merger, I think you're going to get a lot of people looking to buy LCID stock or Lucid Motors stock. So that is important. Very important to keep in mind. The share utilization 99.18%. So a very hard stock to borrow, guys. But something I want to point out as well is the free flow on loan at 28.08%. That is 10% larger than the actual short interest. So there's shares that hedge funds and institutions currently have that they could sell short at any time, but it doesn't look like they're actually doing that. We're seeing a lot of return shares and borrowed shares, especially last week. We've seen about 15 to 20 million for return shares and borrowed shares. These are not shares that were actually being covered. These are shares that were just held in people's accounts and decided to return instead of shorting them, probably for the best if this short squeeze and gamma squeeze does happen. Now to address the dilution concerns, guys, with this merger, they're getting $4.5 billion of cash. Their market cap is going to be about $30 to $35 billion. They have no need to raise any capital anytime soon. They're not going to do that. They want to do that when the price is high, not when the price is suppressed at what, $24.25. They're not going to be issuing shares right away. Yes, there will be dilution in the future, just like there is with any stock on the market, especially a hyper growth company like CCIV. But this is not something that should be deterring you from investing in a company or not. It's going to happen. The reason stocks are on the stock market, the reason you get listed on the markets, is to raise capital. They just simply want to get all their capital raising needs out of the way, which I actually see as a good thing, because you're not going to get the company asking for additional shares left and right like you see with other companies. And this also provides them some level of stability, because they they already have the authorization to do this, and you might not even recognize when they are doing this if they are only doing it for a couple million shares here or there, whatever the case is, guys. It's nothing to be concerned about. As you do know, as I say in a lot of these videos, Peter Rawlinson, he said himself on CNBC interview that he is mostly paid in stock options. So if you're diluting the stock, the share price is going to stay down. That's not incentivized for him whatsoever, or the other executives or even employees at Lucid Motors. Nobody wants dilution unless you really have to, right? So they're paid in stock options. That's another reason I don't think dilution is coming anytime in the near term future, as well as they had said themselves, and this is after the whole lawsuit incident where they basically had said before the merger was actually announced that they were expecting to do about 6,000 vehicles in 2021. Then they changed it to 557 vehicles for 2021. Now they're getting all these lawsuits. So they've been very careful what they have been saying, and they redefined that they have enough cash until the second half of 2023. So take that how you want. I don't know. Some people have their own opinions on that whole situation. I'm not really trying to get into that too much, but those are the main reasons why dilution is not coming in the near-term future. It's not going to happen. You have $4.5 billion. You have one factory. You're getting production ready. Why would they need any more capital? That's simply not the case. And if that's the only thing you're looking at when investing in CCIV or thinking about investing in CCIV or Lucid Motors, I should say, that is a very flawed way to think about this. Now, to acknowledge the whole gamma squeeze potential, because obviously there's a big short squeeze potential if we do get that outside volume coming into the stock, because even with the 6% day, or I believe 8% day that we've seen Friday, we only had almost 18 million in volume. So if we start to see really big volume days, then that's really where you're going to get a lot of buying going into the stock. And just so you guys are aware of basically the logic behind the short squeeze and the volume increases, is because with a SPAC, with a special purpose acquisition company, the shares are backed at $10 usually. There was a lot of demand for Lucid Motors shares or CCIV shares, so they decided to back them at $15. So if the stock's trading at $25, even close to $30, if you're somebody with a lot of money and looking to invest millions and millions of dollars, you're not going to invest that much during the SPAC, because there's always a chance the merger doesn't go through. You would lose 40 to 50% of your money right off top, and nobody's going to do that with 10, 20, 30, 40, 50 million dollars. That's common sense, guys. So I do think you're going to see some big money flowing into this, but I pretty much say that in every single video, so you guys are well aware of what is being said there. Now let's get into the whole gamma squeeze situation, guys. You really have to understand what a gamma squeeze is, and essentially what it is take the open interest, let's say 5,500 contracts that are at the $25 strike expiring July 30th. So that is this upcoming Friday. And essentially what happens, obviously one contract controls 100 shares, so you have the right to buy 100 shares at $25. Well, if you are on the other side of this, you have to sell 100 shares at $25. So once you see the share price start to go up, let's say over $24.50, then you're going to see the market makers coming in, buying the stock to sell, to oblige for these contracts and sell these shares to you at $25, because market makers, they don't lose money. So essentially that's what a gamma squeeze is, all this open buying coming in from more contracts running close to the money and into the money, more buying, and it's just a culmination effect. Now what I'm seeing as far as the option chain for next Friday, like I said, 5,500 in open interest for the $25 strike, 1,500 for the $25.50, 6,300 for the $26 strike. And then at the 30, you're seeing about 4,500. In between there, you're seeing a couple hundred and 2,200, almost 2,300 at the $27 strike. So there is quite a bit of activity closer to the money. So I do think you're going to get a bit of that gap up effect with a lot of market makers actually hedging these positions. Now, something else that I like to pay attention to as well is obviously the open interest of the contracts and how many shares these contracts can potentially control. But even more important than that is the average volume that you are seeing, because on CCIV you're seeing that low volume, really in between about 6 million on the low end and about 17.5 million on the high end, like we did see on Friday. But that is pretty rare. Usually it's in between about 10 and 12 million for volume. And just for this $26 strike at 6,331 contracts, that does control 630,000 shares. And then you're looking at another 5,500, 1,500, 2,300, 1,370, 4,500. You're looking at a couple million shares that would potentially have to be bought of CCIV stock that are additional just to people wanting to buy the stock, just traders coming in because the merger has now been confirmed, as well as the big guys coming in, which I do expect to happen, and start buying the stock. So this could be a couple million additional shares that will have to be bought, and I do think that is going to be the case. That is really why I think there's a potential for a gamma squeeze, because every every option chain is going to be different, right? If you've seen these numbers on a stock like AMC or some other stock, you're not really going to think anything of it because the volume is way higher on those stocks, whereas CCIV, the volume is way lower, so this can have a much bigger impact on the actual price action. So that is essentially what I think. I think we'll see a bit of a gamma squeeze, but obviously August 20th is going to be a big expiration week as well. You're seeing a lot of open interest at this $30 strike. You're seeing, I mean, this is going to control about 3 million shares, 4 million shares at the $30 strike for August 20th. So I think you have a big chance for a gamma squeeze right there, but I do think there is a decent chance for a gamma squeeze next week as far as a short squeeze as well. Now, as far as my positions, if you guys don't know, Churchill Capital is at $24.31. I have 168 shares at 12.41% of my portfolio. Average cost $23.14. Market value $4,084.08. I'm up 5.06%. And then I do have some contracts, but the contracts have changed and switched over now that we are not under CCIV anymore. It's going to be LCID, but I guess I can't go over the options with you guys. I have 2 August 20th $30 strike calls, and I believe I paid $167 for those. They're currently worth about $113. So I do expect those to run in the money by August 20th. So that is why I've held on to those trades, as well as I did sell a $20 put for August 20th as well, which is a bullish trade. If you essentially have CCIV close over $20 by August 20th, I would keep that premium that I collected. If not, if CCIV is under, for whatever reason, under $20 by August 20th, I will have to buy shares, I believe, at $18.33, including the premium that I already collected for the trade. So those are my trades. I wish I could actually show you guys if you have not seen those already, but that is the main reasoning really why I think there's going to be a gamma squeeze and a bit of a short squeeze going into next week. Like I said, I'm not a financial advisor, not a financial planner or your dad, so don't necessarily listen to anything I say. Always verify all this information for yourselves and ultimately come to your own conclusions. You are the only one responsible if you make money or lose money in the overall stock market. Now, on your way out of the video, make sure to hit that like button, comment down below, as well as consider subscribing to the channel for more videos like this and to keep you guys up to date with all the stocks that I love trading and investing in for a trade or for the long term, as well as comment down below. Let me know what you think about this whole short squeeze and gamma squeeze idea. It's really common sense. I think when it comes down to it, the only key here is if we do get that volume and that hype post merger, as well as consider subscribing to the channel. And if you guys want to get totally free stock, check out the link down below for public, no deposit necessary, no need to link a bank out. Get up to $70 in your choice free stock in about 3 minutes time. And if you guys want to be notified every time a trade is made in real time, whether it's a day trade, swing trade, or longer term investment, check out the link for the buy and sell alerts. It literally pays for itself. But with all that being said, you guys enjoy the rest of your weekend. I will see you in the next video.